You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday. It is 2 p.m. Central. It is 3 p.m. Eastern. You know what's going on in the world of futures? Well, it's quite a bit. Luckily, you tuned into the right show. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network that continues to grow out there. New shows seemingly popping off all the time. The latest new edition, of course, the Futures Rundown, coming after the closing bell each day. Yet another reason why you should be subscribed to the full network, wherever you get your favorite podcast. And of course, if you want to check out all sorts of fun, the optionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us on the old Futures Rundown today. Pleased to be joined once again by our old pal / fantasy football opponent, Mr. Kevin Green from the Schwab Network. Mr. Kevin, welcome back to the show, sir. How goes your fantasy football travails on the gridiron, sir? I had a bit of a setback this week, but I'm still hanging out in first place. I'm not too mad.
Yeah, I would say it's not my best season, but we still have some time left here. That waiver wire is looking a little bit juicy over the last couple of weeks. A lot of injuries, so hopefully I'm able to turn this one around. But sluggish start, to say the least.
Yeah, I can't recall another year like this where it's so beset by injuries so early. And so prominently, and not just your guy. You could have a great receiver, and then his quarterback goes down, and now you got backups throwing. So there's a lot of that plaguing the system this year, listeners. But you know what? You didn't tune in to the Fantasy Football Cast. That'll be later on the network, probably. But we're going to go dive in instead into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the trading pit, the portion of the show where we break down what the heck is lighting up the futures markets this week. And Kevin, before I get to the upside and the downside movers that are burning a hole in our screens, what is lighting up your collective tape out there in the futures market these days, sir?
Yeah, a couple of items that I'm kind of focusing on. First and foremost, obviously, crude oil has been getting hit over the last couple of weeks, but we are seeing it actually catch a bid today. So let's see if that's going to be able to hold. It got to around that $56, $57-ish area, and maybe we have some short covering activity taking place. And then also looking at the natural gas space, which obviously we'll probably talk about that here. You are seeing that winter seasonal trend of buyers kind of stepping in, taking hold at this point in time. And the weekly chart actually looks pretty aggressively bullish to the upside here. So those are the two items that I have. Obviously, there's a lot going on in this market with the Fed and tariffs and all of these other things. But those two products are really kind of catching my eye over the last couple of weeks.
It was nice. I went to fill up my new car the other day and it paid $3.25. I haven't paid that low to fill up in quite some time, Kevin. So the ripple effects of the futures markets being felt far and wide, even if you're not slinging WTI futures, listeners, you're still feeling it when you head on over to the pump. Let's see what the futures markets are feeling this week. Let's go to the upside first. Break down our top five for the week. Number 5, we're kicking it off in dairy. I can't go there, Kevin. Maybe you can. Class 3 milk up 5.03%. to kick us off this week. Number 4, bad news for all you Starbucks fans. You thought maybe you're going to get a bit of a reprieve. Coffee prices have been just, I think the technical term is ridiculous of late. And no rest for the wicked this week, up another 6.57%. So that Starbucks drip getting ever more expensive every week. And maybe you thought, hey, I'll switch to hot cocoa. Nope. Number 3, cocoa up 8.42%, listeners. So a lot of our consumables getting a little bit more pricey this week. Number 2, we're keeping it in dairy. It's dry whey, listeners. Just a banger week for dairy, up 9.17%. And the big dog, as Kevin alluded to, it's nat gas starting to take that seasonal uptick that you tend to expect, but doing it pretty hard and fast, up nearly 16% this week, 15.92%. So, Kevin, maybe we'll start there. You kind of just alluded to it. I know you're an energy guy. Nat gas has been a fascinating beast to watch pretty much all year. I remember was it around June or July where it had that surprising uptick north of the 3 handle, and everyone thought, why are we rallying so hard in nat gas? It's summertime. It's when it's supposed to be boring. Then it kind of gave up the ghost a little bit, and now we're seeing this seasonality kick back in with gusto. What is catching your eye in nat gas right now, and anything else lighting up your tape in the land of coffee and dairy, sir?
Well, I would say for natural gas, obviously, if you look at the managed money positioning, it's still overall bearish. I mean, we haven't gotten away from that trend over the last couple of years. And what we have seen over the last couple of weeks, it may be some opportunity for the LNG trade or liquefied natural gas to really ramp up here over the next couple of years. There's obviously reports that the EU is trying to transition away from Russian provided gas as well as other energy products by 2027. If that's going to be the case, they're going to need to have another supplier. And that could be us here in the United States. India looks like they might be potentially pulling back on Russian crude oil. That could also kind of disrupt some of the energy flow just in general. And then you have these seasonal trends that you see. People usually get prepared for that winter bull cycle for natural gas right around the end of September, middle of October, the transition from injection season where we're putting natural gas into the storage. And now we're going to have draw season. So drawing that natural gas out of storage. Now, there's still some bearish factors that we have to be mindful of. European inventory levels are at pretty stable levels for now as they go into the winter months. But you are seeing some bullishness. Last thing I will say, some of this is also mechanical, Mark. We did have a contract roll over the last 2 or 3 trading sessions. So you know that could also create some artificial volume and also probably created a situation where individuals that were shorting one contract might have had to offset and kind of roll into another one, which is creating this dynamic of this bullishness. But the 350 level, $3.50, going to be interesting to see if we're able to resolve that. Last time that we hit it, back about maybe 4 or 5 weeks ago, and we were feeling it pretty aggressively to the downside, actually about 2 weeks ago. So we'll see how this all plays out here.
Yeah, it seemed like we were just there, and then we faded it pretty aggressively, and now we're right back there, Kevin. So we'll see. We'll see how all that moves as we keep on rolling to the downside, listeners. What has given up the ghost this week? Our old pal ETH. If you've been riding the ETH train, I know a lot of you have been over the better part, certainly of the last few months, as ETH has just been on quite the roller coaster this year. Our biggest losing asset of the year swung to almost, if not the biggest winning asset of the year. Now giving a good chunk of that back, because we're seeing in the crypto space a lot of that across the board. Tune into our crypto rundown show every Monday if you want to go deep into all things crypto. But ETH coming in at number 5 this week, off about 4.8% on both the big and the micro futures. Number 4, precious metals can go down, Kevin. Who knew? Silver off 7.09%. You have nothing to be mad about if you're long precious right now, listeners. You've had a hell of a year so far. And then number 3, we got platinum. So another precious giving up a little bit of the ghost today, off 7.3%. Number 2, our old pal OJ. Just when you think it can't get any cheaper, off 8.18%. And the number 1 downside mover this week, yet another one from the shiny crew. It is palladium, off 8.83%. So, Kevin, some interesting names here. Ether's been kind of on a bit of a roller coaster, so maybe not terribly surprising there. But a lot of the shiny stuff giving up some of the ghost out here this week. We haven't talked to you in a little bit on the show. Let's dive into the precious talk now, because it is kind of inescapable in anything futures or futures options related these days, you almost have to lead the conversation with gold and the rest of the shiny stuff because the performance has been so ridiculous. I'm hard pressed. In fact, we've looked at it. You're hard pressed to find outside of the Hunt brothers collusion days any other year where the major precious metals were up 50 odd % year to date. It's certainly a wild time. Giving some of that back. What's catching your eye in the shiny stuff right now? And then anything else catching your eye in the world of ETH or OJ, sir?
Yeah, so for the metals, let's kind of we'll go through them fairly quickly here. Obviously, we are seeing a pullback in gold. Gold has had a hell of a run, as you kind of talked about. What's actually very interesting, if you guys go back on your charts, look at it over the weekend or so, do your studies. Usually, gold does not top off at the round number, the shiny landmark type of number, the 4,000, the 3,000 level or so. You actually see it topping off at around 4,400 or the 400 level within that sequence here. That's exactly what we did. If you actually look at gold, we topped out at 4,398 mark before actually pulling back. Now we're testing the 20-day moving average. We are getting a little bit of a bounce. It's still down on the day, but we are getting a little bit of a bounce. Let's see if we're going to be able to get some buyers to step in at that 20-day moving average. We're also violating a trend line that's been in place pretty much since August. There has been this big rush in the physical market early on in the year. We saw massive deliveries being tendered in the CME options. The LME obviously had a lot of shortages. We were trying to get ahead of tariffs. That kind of created that domino effect to the upside for gold. Silver, which has outperformed gold this year, a lot of people don't talk about that, is in a structural deficit. So you are actually seeing industrial demand increase. And that's because of solar panels, among other things. But solar panels are actually getting the lion's share there from the silver products. And it's in 90% of the overall electronics that we utilize on a day-by-day basis. So silver hit that $50 level. Obviously, we've been basing out for almost a decade now, a little bit over a decade. And we're going to see if it's going to be able to pull back a tad bit and then kind of move a little bit higher. Platinum, palladium, here's all I got to say. The industrial metal space, I think everybody just started looking at the metal move and just said, hey, this thing's shiny, let's pick it up. Platinum, palladium have been aggressively shorted over the last couple of years. They did catch a bid, but I'm not sure if there's a lot of optimism there when you're looking at ICE vehicles and catalytic converters, if that's going to be the true driver. So a pullback in the metals, seeing a little bit of a rotation. I don't have that much when it comes to commentary around Bitcoin or Ether. I think I look at those as pretty much liquidity gauges. And when I do see Ether coming down, or if I do see Bitcoin coming down, I usually look at the volatility complex. There's usually a pretty decent correlation there. That volatility for the equity markets kind of ticks up a day, 2 days, 3 days later after we see liquidity coming out of crypto.
Yeah, a lot to unpack there. You're right. It has been a good trade for most of the year. Just be long most crypto and long most precious metals. Maybe some profit taking, maybe a little bit of that. Just coming back the other way, listeners. They certainly have some upside to spare in those complexes as we keep on rolling. Is there volume to spare out there in the futures market? Say the answer is yes. It's a pretty active day out there. We use that barometer, Kevin, on the show of about 300,000 contracts by showtime. That's a decently active day. And we're north of that today. 363,000 contracts is what it cost you to break into our top 10. Also interesting to see a little bit of a respite from the just rates and equities that usually dominate our list. Got an interesting name, maybe a name you might expect, maybe a surprise popping in here in our top 10 today. But number 10, it's the 30-year, 363,000 contracts. Number 9, the ultra 10-year, 388,000 contracts. Number 8, the surprise I alluded to earlier. We always find it interesting when, and things are hot in those markets when you see WTI pop into the top 10 or gold making an appearance today at number 8, 431,000 contracts. By the way, we are once again 10 for 10 all December, all the time. No near dated contracts on the list this week, listeners, all the way out to the end of the year. Gold number 8, 431,000 contracts on the tape so far today. Number 7, it's the 2-year, 437,000 contracts. Number 6, the NASDAQ E-mini, 603,000 contracts. Number 5, we're only at number 5. We're already up to 804,000. So it's a pretty dense activity day, listeners. It's the 5-year coming in appropriately enough at number 5, 804,000 contracts on the tape. Number 4, to the 10-year we go, which is kind of wild that we have the 10-year all the way at number 4, listeners. We don't see that too often out there in the futures market. So again, some rarefied territory we're hanging out in today. The 10-year, number 4, 1.38 million contracts. What could top the 10-year? How about the S&P Micro? 1.42. Now, again, take those numbers with a grain of salt. It is a micro. But there are a few micros flooding into our list these days. Number 2, though, you can't dismiss this one. It's the big, in air quotes, E-mini. It's the biggest contract they got left. The S&P E-mini, 1.56 million contracts. So the E-mini, trading fast and furious these days. Now, a little bit of this return of the whipsaw action we saw earlier this year does seem to be driving a lot more intraday equity futures activity. So very interesting stuff there. And then the big dog on the list today, again, it's a micro, but a hot one. It's the NASDAQ Micro, 1.9 million contracts on the tape. So, Kevin, kind of an interesting list. We don't see gold sneaking in there too often, but obviously making an appearance today. Also, the 10-year fallen to number 4. I can't remember the last time, if ever, that's happened since we started the show about a year ago, sir. So, kind of an interesting list today, Kevin. What's catching your eye?
Yeah, interesting list. It really kind of spells volatility, in my opinion. One, you have a lot of micro contracts hitting the tape, so a lot of retail traders probably getting into this action. Volatility is heightened up a little bit. Some pretty decent scalps within the market here today. You have the 10-year note futures, obviously catching a bid. Yields are moving lower. I'm not sure how much lower they're going to go before this Fed meeting here, but obviously the market is projecting that the Fed is going to cut rates obviously 2 more times at least this year, but maybe aggressively at the front half of 2026 here. And then gold, just because once again, it's been rallying so hard. We did see one of the largest volume days on the gold contract here, Mark, on Friday. It was like the largest volume day that we've seen since 2020. And that was really kind of the start of the consolidation period before we actually saw this breakout to the upside here. So I take this more of a risk-off type of market. A lot of volatility, preparation for these earnings as well might be creeping into this. And not surprised that we are seeing some of this volume here. And I just want to shout out to the CME. The micros are catching on really, really well. And I'm so proud of them that they're able to pull this off, man. It's been really hard to roll out new contracts, but it seems like these launches have been doing a phenomenal job over the last couple of years here. Now we're starting to see them in the grains as well. That's interesting.
Yeah, that's a wild time. It's all micro and bite size all the time out here. People were wondering for a while maybe if the 0 DTE would cannibalize that a little bit. Maybe we saw that initially, but it seems like now they're both very much their own domains with their own separate use cases and both getting action out there these days. By the way, another weird day. We were commenting earlier not that long ago, actually, Kevin. It was kind of surprising to see gold and the S&P tracking to the upside. You don't see that very often. Now a rare day where we're seeing gold and the S&P tracking to the downside. So I guess you can't complain if you rode them both up. If you're riding the elevator back down now, hopefully it's the escalator, not the elevator in this case, but still interesting stuff. Wild markets we're all living through together out there, listeners. As we look back a little bit to the trends we've seen unfold so far for the year, it has been a wild year. There will be case studies written about what happened this year, just in Q1 and Q2 alone, let alone what we're seeing out there right now. Let's kick things off. Let's keep things positive. Let's go to the upside first, listeners. We kind of touched on it. You kind of know some of the trends that have dominated this year. If you put some precious or some crypto in your back pocket at the start of the year, you're looking pretty good. And that remains the case even with some of the recent downturns we've seen. Number 5 to our list this week is coffee. It's been just a banger year for coffee, a rough year for coffee lovers, unfortunately. Up 45.5% year to date. Number 4, gold, still hovering around that close to 50% level, 47.87%. Number 3, it's palladium. So again, we have a sea of precious here in our top 5, 55.8%. As Kevin alluded to, silver outpacing gold, coming in at number 2 so far year to date, up 56.6%. And the big dog for the list, it's platinum, up 67%. Kevin, anything catching your eye? We kind of talked about most of these. It's kind of been a strong upside year for the precious and indeed for coffee, sir.
Yeah, it has been. I mean, the coffee move is just it's an interesting market, very light market. So if you're not really experienced or not really tuning in to the weather patterns that are happening in West Africa or what's happening in South America, very tough market to really try to trade or scalp into. Just because there's so many other dynamics and you're really trading against, let's say 80%, 90% of producers or bona fide hedgers that are out there. And we kind of talked about the metals play. And I think right now you kind of talked about the S&P 500 correlating very strongly to gold. And that's something that usually does not happen. It usually does happen when we have, these blow off tops in either one or the other. And I think you're seeing a reset. I don't think that we're done with this metal move, though. Keep your eye out on that. I think you're going to see some selling taking place. You're going to have maybe retail kind of get washed out a tad bit. This is the first time, Mark, a lot of people have experienced a 7% drawdown in gold or silver. And this is something that does actually happen with both of these products, but that could actually frighten a lot of people that might have been tiptoeing their way either into the SLV ETF or using SLV options or using the futures or futures options or what have you. So be mindful. These pullbacks do happen in longer term trends here. Let's see how this all shakes out. You want to see implied volatility start to come in a little bit. It got a little bit outstretched. And I would not be surprised if you do see silver, gold still topping the charts here when it comes to year-to-date performance.
All right, to the dark side we go. Listeners, kicking things off in the ags for the year. It's the winter and spring wheat, both having a rough year so far, off a little over 19% each. So they're kind of tying for the number 5 spot there. Listen, number 4, it's a rough year for rough rice, off nearly 24% year to date. Number 3, we talked about cocoa earlier, coming back here year to date, off nearly 32%. So I guess if you want to swap some hot cocoa for your hot coffee out there, cocoa is still cheaper on the year. I'm not sure if you're getting your caffeine fix and a lot more sugar perhaps in the hot cocoa, but there you go. If you need that hot beverage in the morning, perhaps hot cocoa is your huckleberry. Number 2, back to the land of dairy we go. It's cash settled butter. So again, your breakfast table, if you switch to hot cocoa and you put a lot of butter on your toast, looking a little bit cheaper out there, off 40% for the year. And of course, keeping it a balanced breakfast, you got to have a glass of OJ, off 57.2% OJ, continuing to plummet on the year. So I guess the narrative of our breakfast table at least getting cheaper, Kevin, continues here. And I guess if we look at the wheat, your toast just got cheaper, Kevin. So there you go.
Yeah, hopefully this is reflected in CPI whenever the government kind of reopens, we get that number. That would kind of help us out. You know what? The wheat markets in general, keep your eye out on that one. Obviously, it's been very, very depressed when it comes to the price action. It continues to move a little bit lower. There is a significant amount of supply that's being brought online, not only by Ukraine, but also in Russia here. But we are probably a little bit outstretched here when you're looking at managed money short positioning. And so this could actually be a market that does get the opportunity for a squeeze to the upside as we get these WASD reports over the next couple of weeks. Obviously, planting has been okay, but this might be one of those technical setups for the wheat market where maybe the fundamentals aren't too bullish, but maybe the shorts are a little bit outstretched as well, and they might need to cover in order to protect risk for any type of violent move to the upside. I'm looking at the wheat market as a potential play here over the next couple of weeks.
Well, Kevin, that music means we've come to the end of our quick Just the Facts, ma'am, sojourn through the world of futures this week. Before we go, we touched on a lot of complexes. Maybe there's a couple others that are top of mind for you that we didn't have a chance to squeeze into the show. Now is your chance. Have at it, sir. The floor is yours.
I would say copper markets, be mindful of that. I mean, obviously, we have seen a lot of these copper miners report, and they haven't been the best, and that's just because they're copper miners. It doesn't mean that copper in general is falling out of favor. In fact, Mark, we have about maybe 4 or 5 mines right now that are having issues when it comes to production. Obviously, Freeport-McMoRan is getting hit with this as well, and we might see more supply shortages in copper ore at the first half of next year as well, and that tightening of supplies could actually push prices higher a little bit. And if we're not able to come to a deal with China and the U.S., we might also be restricted from some smelting operations from China as well. So I think the copper trade is still not done yet, just because of the fundamental fact that they have a supply shortage that they're not going to be able to fix when it comes to those mines, at least by the second half of next year. Maybe we have an opportunity. If not, we could be looking at 2027 until this actually corrects itself.
Kevin, I'm not sure we're legally allowed to talk about base metals. It has to be all precious all the time, sir. I'm not sure if you got the memo. But yeah, fascinating stuff out there in copper. That market has certainly transformed, and certainly from an options perspective and indeed a futures perspective, a lot more liquid than perhaps it used to be for the listeners of this show, a lot more approachable as well. And Kevin, if folks want to go approach some of your content, whether it's on copper or precious or anything else, where should they go? What should they do?
Yeah, you can check me out on X or Twitter, whatever you want to call it, at KG Bull and Bear. You can also check me out on the Schwab Network as well. I pretty much do about 4 or 5 segments every single day, from options flow to commodities moves and things of that nature. So Mark, I always appreciate you having me on. Look forward to the next time here. And I look forward to trying to beat you in fantasy football here over the next couple of weeks.
Yes, I'm looking forward to that as well. If you want Kevin's fantasy football tips, he'll be putting those out sometime soon as well. So follow him over there on the Twitter if you want those. In the meantime, listener, that's going to do it for us on the Futures Rundown. Not going to do it for us on the network today. Back after the closing bell in about exactly an hour to wrap up the day. All things options. If you want to know what lit up the tape out there, we've got it for you on the Hot Options Report. Back again tomorrow with our friend, the Flow Master in hand, to talk all things flow on the option block, as well as, of course, the sister program to this one, This Week in Futures Options. And then, of course, Friday Vol Views. And we wrap it up with our pro members hanging out, talking a little bit of unusual activity on options oddities. You want to check that out. TheOptionsInsider.com/pro is the place to go to learn more. All sorts of fun going on out there. Unusual activity, pro Q&As, even fantasy football these days, listeners. If you want to beat up on not just me, but a whole bunch of other folks who are on the network, TheOptionsInsider.com/pro is the place to go to have all that fun. And then we're back again next week. Another great episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.